Man, it has been a wild month for the economy and the stock market, hasn't it? If you're feeling like things are just chaotic, you are definitely not alone. It really feels like a few powerful forces have all crashed together at the exact same time, creating what a lot of people are calling a perfect storm. So let's get right into it. Why does everything feel so shaky? Well, the reason for all this anxiety isn't just one single thing. Nope. It's actually a combination of unique and really powerful economic shocks that are all hitting us at once. So today, we're going to break down exactly what's going on. Here's the plan. We'll start by looking at the three big shocks that are rattling the market. Then we're going to pull up history's playbook, because we've been through moments like this before. And finally, we'll talk about a clear, simple strategy for how to navigate all of this. So, this is the most important thing to get right off the bat. We are not dealing with a single isolated problem. Not at all. We are facing three major, totally unrelated events that are all creating this intense, simultaneous pressure on the global economy. To really get the full picture, we gotta look at each piece of this storm individually. So let's start with something that affects every single one of us every single day: the price of oil. So the first shockwave kicked off with a geopolitical conflict that almost overnight had a huge effect on energy markets around the world. And look, this isn't just some abstract headline. It's directly tied to the price you pay at the pump and, for pretty much everything else. Okay, so here's the chain reaction. A joint attack on Iran led to a really fast retaliation. See, Iran controls this critical passageway for oil tankers called the Strait of Hormuz, and they basically just closed it off. Now, get this. That one little strait is responsible for moving 20% of the entire world's oil supply. With that choke point sealed, prices for oil, gas, and even groceries are all shooting up. So, in response to this crisis, dozens of countries, including the US, got together and did something historic. They all agreed to release 400 million barrels of oil from their strategic reserves to try and cool things down. This is the biggest release of its kind ever. Now, 400 million, that sounds like a massive, massive number, and it is. But to put it in perspective, you have to realize that the world burns through about 100 million barrels of oil every single day. So when you do the simple math, that huge, historic release of oil, it only covers about 4 days of global demand. It's like putting a Band-Aid on a huge wound. It's a very short-term fix for what could be a really long-term problem. And that is exactly why the market got nervous and oil prices actually went up after the announcement. All right, let's move on to the second shock, which is a big issue happening right here at home. After a huge Supreme Court ruling, the United States government is now on the hook for a bill that's over 150 times billion dollars. So here's what happened. The Supreme Court looked at a bunch of tariffs the government had put in place and said, nope, these are illegal. And now a judge has followed up with a direct order. Every single dollar collected has to be paid back to the companies that paid them. We're talking big names like Walmart, Costco, and Target. Now, when the government came back and said they weren't sure how to even begin making such a complicated repayment, the judge's reply was, well, let's just say it was blunt. There's no getting out of this one, and as you can see from that quote, the clock is ticking. And that ticking clock is expensive. I mean, really expensive. For every single month the government delays paying this back, it racks up another $700 million in interest. And since the government's main source of cash is, tax dollars, that's a bill that will ultimately fall on all of us. And now for the third shock. And honestly, this is the one that has Wall Street really, really spooked. It's a crisis that's been brewing in a corner of the financial world that you don't hear about much: private credit. So for years, companies that were too risky for a normal bank loan went to these private credit funds. But with interest rates going up, a lot of these businesses just can't pay their loans back anymore. They're defaulting. And as word of these defaults got out, investors, everyone from regular people to big institutions, sprinted for the exits, trying to pull their money out. This forced giant firms like BlackRock and Morgan Stanley to literally freeze withdrawals to stop a total collapse. And here's the kicker. Here's why this matters to everybody. This isn't just a problem for some niche funds. Major traditional banks, like Wells Fargo, they invested a ton of money into these private funds. So if these funds go under, the pain could spread right into our mainstream banking system, and that would be a much, much bigger problem. Okay, so we've walked through the three shocks creating this storm. It sounds pretty grim, I know. But now let's zoom out and look at history's playbook, because as intense as all of this feels right now, market storms are absolutely not a new thing. This slide says it all, really. There is a consistent pattern. I mean, look at some of the worst crashes in history. Each one felt like the end of the world at the time, from the Great Depression to the 2008 financial crisis, which, by the way, was followed by the longest bull market ever. The point is, despite the panic of the moment, every single major crash has been followed by a powerful, sustained recovery. Every time. I love this comparison because it really shows you the weird psychology we have with investing. The stock market is one of the only places on earth where, when things go on sale, people run out of the store screaming in terror, right? If you saw your favorite TV for 50% off, you wouldn't panic. You'd think it's a great deal. Reframing a market drop as a sale can totally change your perspective. So, knowing all of this, the shocks, the history, the psychology, what's the actual strategy here? How do you get through this storm without letting fear take over? The answer, believe it or not, is actually pretty simple. The legendary Warren Buffett absolutely nailed it with this one. The moments when everyone else is panicking, when fear is at its highest, those are often the moments of the greatest long-term opportunity. This quote is really the foundation of a smart, rational mindset, one that doesn't just follow the terrified crowd. So, how do you actually do that? Well, here are the 3 key things that act like your financial shelter in a storm. First, you have to keep a long-term mindset. Think 20 years or more, not 20 days. Second, you have to resist that powerful urge to sell just because you're scared. And third, keep investing consistently. It's called dollar cost averaging, and it just means you automatically buy more when prices are low, which can be a huge advantage over time. If you take one thing away from this, let it be this. Trying to perfectly guess the market's bottom and top is basically impossible. The most successful strategy, the one that has built wealth through every single crisis in history, is simply staying invested and giving your money time to grow. It's about time in the market, not timing the market. At the end of the day, these downturns and these moments of panic, they aren't some weird glitch in the system. They are a normal, recurring feature of how this all works. So the real question isn't whether a storm is coming, it's whether your plan and your mindset are ready for the weather.